Question 7. How liquid are the assets held within the IBIT ETF, and how does this impact trading? While the IBIT ETF itself trades on an exchange and is considered highly liquid, it's important to differentiate its liquidity from the underlying assets it holds. CME Bitcoin Futures Contracts. IBIT's liquidity. 1. Exchange traded. IBIT trades on major exchanges like NYSE Arca, providing investors with easy access to buy and sell shares throughout the trading day. 2. High trading volume. The IBIT ETF enjoys a significant trading volume, surpassing many other Bitcoin-related ETFs, ensuring smooth buying and selling with minimal impact on the price. CME Bitcoin Futures Liquidity. 1. Underlying asset. The liquidity of IBIT ultimately depends on the liquidity of the CME Bitcoin futures contracts it holds. 2. Generally liquid. These contracts are traded on the highly regulated and liquid CME Globex exchange, ensuring ample buying and selling opportunities. 3. Potential risks. However, compared to traditional assets like stocks, Bitcoin futures can still experience periods of lower liquidity, particularly during volatile market conditions. This could potentially impact the execution price when IBIT needs to roll over its contracts. Impact on trading here. 1. Generally smooth trading. Due to its exchange-traded nature and high trading volume, IBIT itself is generally very liquid and easy to trade. 2. Indirect impact of futures liquidity. However, indirectly, the liquidity of CME Bitcoin futures can influence IBIT's trading during periods of lower futures liquidity. This might lead to slightly wider bid-ask spreads, or potential execution delays when rolling over contracts. Summary. 1. IBIT itself is highly liquid due to its exchange-traded nature and high trading volume. 2. The underlying CME Bitcoin futures contracts are generally liquid, but periods of lower liquidity might indirectly impact IBIT's trading. 3. Overall, the impact of futures liquidity on IBIT's trading is likely minimal under normal market conditions. Question 8. How does the IBIT ETF handle changes in market conditions or economic factors? As a passively managed ETF tracking the performance of Bitcoin futures contracts, IBIT's response to changing market conditions and economic factors is primarily indirect and influenced by two key aspects. 1. Bitcoin price movements. Core driver. The most significant impact comes from fluctuations in the price of Bitcoin itself. Since IBIT tracks Bitcoin futures, its price directly reflects these movements, regardless of the specific market conditions or economic factors causing them. Upticks and downturns. During economic upturns, if Bitcoin's price appreciates, IBIT's price is likely to follow, potentially amplified by margin requirements. Conversely, during downturns, IBIT's price would decline alongside Bitcoin, potentially with magnified losses due to margin requirements. Volatility. Periods of high volatility in the Bitcoin market are directly reflected in IBIT's price, potentially experiencing even larger swings due to factors like basis risk and margin requirements. 2. Rolling of futures contracts. Continuous process. IBIT constantly rolls over its expiring Bitcoin futures contracts, with newer ones to maintain exposure. This process is not directly affected by market conditions, but can be impacted by Roll costs. During periods of high volatility or significant price movements, roll costs can eat into IBIT's returns, impacting its performance indirectly. Basis risk. The difference between the price of futures contracts and the spot price of Bitcoin can be amplified during volatile market conditions, leading to tracking errors and potentially affecting IBIT's performance. Key points here. 1. IBIT doesn't actively react to market changes. Its price movement is primarily driven by Bitcoin's price and the mechanics of rolling futures contracts. 2. Economic factors like interest rates, inflation, or global events can indirectly impact IBIT through their influence on Bitcoin's price. 3. Understanding how Bitcoin reacts to various market conditions and economic factors can provide insight into potential IBIT performance, but it's crucial to remember that past performance is not indicative of future results. Additional considerations here. 1. IBIT's expense ratio, which covers operational costs, remains constant regardless of market conditions, but can affect its overall return. 2. Regulatory changes or restrictions on Bitcoin or Bitcoin futures could potentially impact IBIT's ability to track its underlying asset. Question 9. How does the IBIT ETF differentiate itself from other ETFs with similar investment objectives? While several ETFs offer exposure to Bitcoin, the IBIT ETF stands out in a few key ways here. Direct futures exposure. Unlike many Bitcoin-related ETFs that hold a basket of traditional assets correlated to Bitcoin's price, IBIT directly invests in CME Bitcoin futures contracts. This eliminates the need for complex valuation models and potentially reduces tracking errors. Continuous exposure. The ETF employs a continuous roll strategy, replacing expiring futures contracts with new ones throughout the trading day. This ensures uninterrupted exposure to Bitcoin's price movements, unlike some ETFs that rebalance periodically. Exchange-traded convenience. IBIT trades on major exchanges like NYSE Arca, offering easy access and familiar trading mechanics for investors comfortable with traditional ETFs. This contrasts with some Bitcoin-related products that trade on less regulated platforms. Potential drawbacks here. 1. Futures costs. The continuous rolling of futures contracts incurs roll costs, which can eat into returns, especially during volatile periods. 2. Margin impact. The use of margin to hold futures contracts can amplify market movements in both directions, leading to potentially larger gains or losses compared to directly holding Bitcoin. 3. Limited diversification. IBIT offers concentrated exposure to Bitcoin, lacking the diversification benefits of ETFs holding a basket of assets. Alternatives to consider. 1. CI Galaxy Bitcoin ETF, BTCQ. This ETF holds a basket of Bitcoin futures contracts and other Bitcoin-related securities, potentially offering some diversification. 2. Grayscale Bitcoin Trust, GBTC. This is a trust that directly holds Bitcoin, but it trades at a premium to its net asset value, NAV, and isn't an ETF. Question 10. How is the IBIT ETF best suited for different investor profiles and risk tolerances? The IBIT ETF, with its unique characteristics and inherent risks, caters to specific investor profiles and risk tolerances. Here's a breakdown to help you determine if it aligns with your investment goals. Suitable for 1. Aggressive investors. Those comfortable with high volatility and seeking direct exposure to Bitcoin's price movements. IBIT offers this exposure without requiring direct ownership of the cryptocurrency, potentially simplifying investment processes for some. 2. Short-term traders. The ETF's intraday liquidity and continuous exposure through futures rolling can be beneficial for short-term trading strategies that capitalize on price fluctuations. Less suitable for 1. Risk-averse investors. The inherent volatility of Bitcoin and the potential amplification of price movements through futures and margin magnify risks. Investors with low risk tolerance might find IBIT's fluctuations unsuitable for their portfolios. 2. Long-term investors. IBIT lacks the diversification benefits of broader ETFs and might not be ideal for long-term wealth accumulation strategies focused on capital preservation and steady growth. Key considerations. 1. Volatility. Be prepared for significant price swings in both directions, exceeding the volatility of traditional asset classes. 2. Costs. Understand the impact of roll costs and margin requirements on returns, especially during volatile periods. 3. Investment goals. Align IBIT's risk profile with your overall investment strategy and risk tolerance. Consider its suitability within your diversified portfolio. Alternatives. 1. For lower volatility, explore ETFs that track diversified baskets of assets with lower historical price fluctuations. 2. For long-term exposure, consider ETFs with broader exposure to various asset classes for long-term wealth accumulation. Question 11. How does the IBIT ETF's investment strategy align with broader portfolio goals and objectives? Whether the IBIT ETF aligns with your broader portfolio goals and objectives depends heavily on your individual circumstances and investment strategy. Here's a breakdown to help you assess its suitability. Potential benefits of including IBIT. 1. Direct Bitcoin exposure. IBIT offers a convenient and regulated way to gain exposure to Bitcoin's price movements, potentially amplifying returns compared to traditional assets. This can be attractive for investors seeking diversification beyond traditional asset classes, or those bullish on Bitcoin's long-term potential. 2. Portfolio diversification. Limited while not a diversified asset itself, IBIT can add a new asset class to your portfolio, potentially improving diversification and reducing overall risk through reduced correlation with traditional assets. However, keep in mind that Bitcoin itself exhibits high volatility, so its diversification benefits might be limited. 3. Short-term trading. The ETF's high liquidity and continuous exposure can be beneficial for short-term trading strategies that capitalize on Bitcoin's price fluctuations. Potential drawbacks of including IBIT. 1. High volatility. Bitcoin is known for its extreme price swings, which can be amplified through the use of futures and margin in IBIT. This volatility might not align with the risk tolerance of many investors, particularly those with long-term goals or conservative risk profiles. 2. Costs. The continuous rolling of futures contracts incurs roll costs that eat into returns, especially during volatile periods. Additionally, the expense ratio associated with the ETF itself further reduces returns. 3. Limited diversification. IBIT's concentrated exposure to Bitcoin limits its diversification potential compared to broader ETFs holding a basket of various asset classes. This can be a drawback for investors seeking to mitigate risk through diversification. 4. Uncertain long-term outlook. Bitcoin's future and regulatory landscape remain uncertain, potentially impacting its long-term value and the viability of IBIT as an investment. Aligning IBIT with portfolio goals. 1. Consider your risk tolerance. If you have a high risk tolerance and are comfortable with significant price fluctuations, IBIT might be a suitable addition for a small portion of your portfolio. 2. Evaluate your investment goals. If your primary goal is long-term wealth accumulation and capital preservation, IBIT's volatility and limited diversification might not be ideal. 3. Assess your existing portfolio. If your portfolio already lacks diversification, and you're seeking exposure to alternative asset classes, IBIT could offer a measured addition. So, there you have it. The IBIT ETF offers a unique way to invest in Bitcoin, but it's crucial to remember that it's not without its risks. Before making any investment decisions, carefully consider your risk tolerance and align IBIT with your broader portfolio goals. Remember, thorough research and consulting a financial advisor are always essential. Thanks for watching, and don't forget to like and subscribe for more informative content like this.